Hello everybody, and greetings from S-Bank headquarters in Vallila, Helsinki. It's a great pleasure for us to present to you our last year's results in this webcast. My name is Pekka Ylihurula. I'm CEO of S-Bank, and with me I have Mika Heikkilä, our CFO, and we will together present this presentation to you. This is actually the second webcast of its kind. The first one we held on the Q3 results last year, and actually this is the first webcast covering the whole fiscal year this time. So this is new thing for us also. And please feel free to post any questions on the Q&A section of the Teams live event. We are happy to answer any questions you might have for us. Earnings improved year on year. It was a good year for us. Before going to last year's results or numbers, I'd like to point out the basics of S-Bank on the right side of this slide. We have a BBB rating from S&P, and we have a stable outlook on our rating. And just to tell you again that we have we have banking operations, and then we have wealth management business in our bank. The banking sector is daily banking, payment services, financing of housing construction and housing companies. This is what we do on our banking sector. On our wealth management sector, we have equity, debt, and alternative investment funds and products. We have real estate asset management. We have discretionary asset management and mobile digital investment service, which is growing rapidly. It's called Säästäjä in Finnish. That's we are really proud of that. As the key message from last year, we chose record-breaking amount of card purchases. And why we did that is that actually the growth has been significant on the number of card payments that we experienced last year. We are above the pandemic levels already, and that is really good. And the second reason for choosing this as the key message is that we are one of the biggest card players in Finland, players in the card business, as you could say, with our 2.6 million Visa cards. We are one of the biggest in that sense. And S-Bank is owned by S-Group, the companies belonging to S-Group, which is the biggest retail group in Finland. And for the first time, we publish the number of purchases that include loyalty, the so-called bonus in S-Group stores. And 23.2% of all these purchases, which are, of course, the majority of purchases made in S-Group, are now paid with our own cards. So that is a really significant number that has been growing really rapidly in recent years. Then the highlights from last year, it was a good year. Our operating profit increased to 24.8 million euros from the 21 of 2020. And lending increased to 6.1 billion euros. It was 5.4 at the end of 20. Comparable assets under management increased to 7.7 billion from 6.5. And capital adequacy ratio rose to 16.3% from 15.7%. And profit growth was influenced, of course, by a solid 7.6% increase in total income and significantly lower impairment losses. That was, of course, that's a really good and pleasing thing that impairment losses came down rapidly last year. And then in the table below that, you can see that our net interest income, it rose only by 1.1%. Mika will go through a little bit in more deeper why the number of actually the number is the change is much bigger when you just take up the customer activities. It's much bigger in that sense. A net fee and commission income 80.8 million euros. There was a 20.6% change in that. Total income was 187 million euros with 7.6% increase. Operating profit, as I mentioned, with 17.8% increase, and cost to income ratio was 0.78 at the end of the year. And next slide, I have some CEO comments and some of the other issues also. Well, I already covered that operating profit increased last year. Secondly, the pandemic persisted. We have become accustomed to operating in a new environment marked by the increasing use of digital banking channels and services. We, as all the other banks, see the decrease in the usage of cash, for example, and the decrease in the number of visits to our branches and service points. That is a significant change that has been happening, and we have been able to scale our operations to meet this new kind of demand. We are highly investing in all our digital services and making them even better than they are today. And we have a strategic goal to have 1 million active customers. Active customer meaning that when you ask from the customer, he or she will say that the S-Bank is the primary bank. And that number of active customers increased by about 57,000. I think that is compared to the market, it's a big number, and it exceeded 532,000 at the end of the year. So we still have a way to go towards our goal, but that is written in our strategy that we will do everything that we can to in the coming years to achieve that 1 million active customer goal. On the banking sector, I already covered the card purchases. Housing loan portfolios growth was 3.3-fold compared with the overall market over 12-month review period. So we are increasing our market share as we have been doing for many years now in housing loans. And banking sector's operating profit was 36.2 million euros compared to 34.9 at the end of 2020. Then on the wealth management sector, there was excellent performance, really excellent. It was the best year ever on our wealth management, and it looks really good how it's developing now. Operating profit was 2.5 times greater than that of previous year's profit, and net subscriptions to the S-Bank funds increased year on year, and performance exceeded the median for fund management companies. So overall, really good performance, really good development on that side. The number of unit holders in S-Bank funds rose by 71,000 in 1 year to 340,000 unit holders, and we are clearly the third biggest fund company in the number of unit holders in Finland. And operating profit on this sector was 5.5 million euros compared to 2 million euros in 2020. And at this point, I would also like to point out two other major developments that we were actually closed during the last quarter of last year. One is a significant corporate transaction that was made in which S-Group companies, SOK and the local co-ops, they purchased all the S-Bank shares, you could say, back to S-Group. 25% of S-Group was owned by local Tapiola insurance company and Elo pension insurance company before this. And this is we view, and everybody else seems to be the same thing, that this is really a good thing for S-Bank. It enables us to go deeper in S-Group and do much more cooperation with other parts of S-Group and develop new and innovative services together with other businesses and parts of S-Group. And we are really happy about this change in ownership. Second major development was that we discarded our second brand. FIM brand was a very established brand in wealth management, and now during Q4 we discarded the FIM brand, and now all our operations are under S-Bank brand. We have S-Bank Private and S-Bank Institutions that replaced the FIM brand in that sense. And the first feelings of that change have been really good. It seems that there's much more potential to get new customers with S-Bank brand than it was with the old FIM brand. So that is also a good development on last year. Then I have one slide that's kind of exceptional slide. I might say we Finns are not really good at praising ourselves, but I think that now this is the right time and place to praise a little bit of ourselves. We have been receiving a lot of awards and honors during the last year. We were rewarded as the most innovative bank, most innovative financial company in Finland. It was the study made by Hanke, the Swedish School of Economics, the Finnish Innovation Index that they cover, most innovative bank in Finland. We are the most responsible bank in Finland for the 9th year in a row in a sustainable brand index. We have been an industry winner for nine times in a row. We are really proud of that. Everybody knows that sustainability is something that everybody's talking about now. S-Bank is the most valued brand in the financial sector for the 4th year in a row, and this was made by Taloustutkimus and study company and the Kauppalehti, the major business daily paper in Finland in brand valuation 2020 study. S-Bank has the most loyal customers in Finland. When you say all the companies, not only financial sector companies, but all the companies in Finland, we have the most loyal customers, and this has been so for many years. This study and survey is published every year. Then we are really proud that we are a very equal employer. We received this Trade Union Pros Equality Award, and I would also like to mention that, for example, everybody that has a director title in the bank, 50% of directors are women and 50% are men. So very equal employer. Then the last one there is we are one of the most inspiring workplaces in Finland. This is something that our employees present in the yearly employee experience survey. So there are six recommendations that we are really proud of at the bank, and why this is important is that we are still a new bank. You could say we are only 15, 16 years old. All these achievements, I think they pave the way that to even more growth and even more innovative and better services that we can create to our customers. We are in a really good position to create new innovative services to Finns. My last slide covers the key information on S-Bank in one slide. Our balance sheet, 8.5 billion euros, 24.8 million operating profit. We have 3.1 million customers, 2.2 million online banking IDs. So we have digital channels open to 22.2 million Finnish citizens or Finns, and 2.6 million international payment cards, 340,000 unit holders in S-Bank funds. Customers can make cash withdrawals and deposits at checkouts at around 1,000 S-Group outlets. So we have very good presence all over Finland. In every community in Finland, there's some S-Group outlets that you can make these very, very basic banking services, withdrawing money and depositing money on your account. And then we have around 80 customer service points at S-Group outlets, mainly on these Prisma stores that they are situated. Thank you. That's my part of the presentation, and now let's see if there are any questions, and No new questions so far, so I will now hand it over to Mika. Go ahead.
Thank you. So I will continue with the key figures first. So total income, as you can see, there is a solid growth over these 4 years here in the table. And last year, actually, the annual growth was around 7.6%. Our long-term target in total income increases over 10% annually. We have very strong deposit funding base. Although the lending is continuously growing, we still have the loan-to-deposit ratio is around 81%, so there is a clear excess in funding. We are growing also very fast, rapidly in the asset under management side. In those numbers here, we have excluded the local Tapiola funds because we ended the cooperation last year. Then in return on equity improved also last year to the 3.9%. We already before the pandemic we had the level of 5.2%, but we are on the way upwards. So we are very proud of the progress last year, and also the capital base is very robust. And here we can look a little bit deeper. On the left side, our total income, and on the right-hand side, the operating profit before loan losses. So on the left-hand side, you can see that the total income has increased to 187 million. And from that, around 90% is coming from net interest income and net fee and commission income. So it means that there is quite a few other income in our total income. From banking side, about 76% of total income is coming there, and the wealth management side is 24%. On the right-hand side, we can see the operating profit before loan losses has grown from 26 million to 41 million in those four-year period. And as Pekka mentioned earlier, our net credit losses decreased to 16 million last year. So there was a good progress compared to last year. And also that was one reason for that our operating profit was 25 million last year. Then our lending has grown over these years very fast or strongly. It was at the end of last year 6.1 billion. There has been around 600 million growth annually every year from 2018 on. We can see also that the corporate customers are around 1 billion and household customers are about 5.1 billion of the total loan book. Corporate customers, they are mainly housing association companies. And the growth side, we can see that the household customers growth was 13.4% and the corporate customers 4.3% last year. Total deposits, they were 7.6 billion last year at the end of the last year. And the growth was also good. In household customers, it was 9.6%. And the corporate customers 5.8%, so totally 9.1% growth totally. Here we have illustrated the split between local Tapiola funds and other funds. So we can see that until 2020, our total asset under management was 10.8 billion. But then when we excluded the local Tapiola funds, so we can see that the growth from 2020 to 2021 is around 18.5%. So there is a good progress there. And especially in the fund capital side, we can see that the growth last year was over 32%. What comes to credit quality, we can see that the volume of loans subject to repayment holidays stabilized last year. Totally, it's representing 5.9%, and it was 1 year before 11.5%. And the amount of loans, they are mainly household loans. There were totally around 420 million household loans subject to repayment holidays last year, and it was year before 680 million. Next slide, we can see on the left-hand side that net credit losses have continued to decrease during the whole year. This good progress. Also, the provision for expected credit losses has been quite stable or modest. So in that way, the whole situation is very good. Also, capital position is strong. You can see that the whole balance sheet of our total assets has grown from 7.6 billion to 8.5 billion last year, and the equity ratio was 6% at the end of the year. On the right-hand side, we can see the key capital ratios. As Pekka mentioned already, the capital adequacy ratio was 16.3%, so it rose from 15.7 to 16.3, and the common equity Tier 1 ratio declined from 13.7 to 13. At the same time, the total capital requirement also declined by 75 basis points. So in that mean the capital buffer still is at good level. From balance sheet on the right-hand side, you can see the liabilities and equity. So around 90% of the total liabilities and equity is coming from deposits. And of course, households deposits are dominating that. We issued last year 170 million senior bond and also 57 million debenture loans. So in that way, the structure is a little bit changed. And on the asset sides, we can see that the household loans dominated the balance sheet. There are totally 5.1 billion household loans. Second biggest is liquidity portfolio, 1.7 billion, and then the corporate loans, 1 billion. Here, when we look at our capital requirements and own funds a little bit more in detail, first you can see on the left hand side that the total risk exposure amount increased around 300 million last year, so to the 3.3 billion. At the same time, the capital or regulatory capital requirement has been quite stable, around 400 million, but then our own funds have been increased by 70 million last year, and it is due to our annual profit and also this debenture loans increase. We fulfill the MREL requirements, and we are well above the regulatory requirement level. Also, our liquidity position is very strong. It was totally 1.7 billion last year. most of that is very high quality assets, and from that around 1 billion euros are cash in central bank. Also the main liquidity ratios, liquidity coverage ratio was 150%, and net stable funding ratio was 151%. So that was the last slide.
Yes, that was the last slide. Thank you, Mika. I will leave this slide on the screen, and let's see if there are any questions, or if you want to post any new questions. So far there are none. No questions so far. So I think then it's time to thank you, everybody who's attending this webcast, and wish you all a very good day, and see you again after the Q1 results in the spring. Have a good day.
Thank you.
Bye-bye.